Welcome back, guys, to another breakdown video. This is going to be our midweek breakdown video as we were away with our family for a long weekend and we've been pretty tied up since we've been back. But we're here now, and this is our weekly outlook for our major pairs. So as always, if you enjoy this content, make sure you drop us a like and a comment down below. We appreciate all the love on the previous videos. If we can aim for a like goal of 20 likes this video, that would be awesome. Smashed the like goal last time, so I'm sure we can do it again this week. What is it that we are looking to do this week? So the first thing to do is we need to recap, of course, the previous trades that we marked up from the 30th, which was last week's markup. So we're going to start off with Euro here, and you can see that we were looking at the liquidity placed across these highs. We were looking for price to pretty much decide where it wants to go short from, because we are majorly short on this pair. We said that, of course, there is a lot of internal liquidity, so there is potential to get right up into this higher area of supply, which is why we have it marked. It's in fact the only area of supply or demand that we have marked. And price did actually play out pretty nicely and led us directly into this high. Now, we did open with a gap on Sunday, and we in fact opened with a gap on Sunday again. This was due to the French election and the potential for volatility within the region caused the euro to be quite disrupted over the weekend. So we had the, for us, best case scenario here, because we went bullish full week, and then we had a scenario for short sells within that supply area. So let's go over and show you what we're looking at for this week. So we actually have a pretty similar outlook because we are in the area of supply that we marked up last week, and we now have a gap to fill at the base where we opened on Sunday. So the scenarios we have this week are the following. This area of supply, of course, being the area that we are looking at most. We want price to sell off from here. So this is the deciding factor for us. We either fail to sell off and we go bullish, and this will change our bias for the longer term, or we sell off from here, sweep liquidity, possibly pull back into an area that causes that liquidity sweep to happen, and of course the gap to be filled. And from this basis, we would expect, again, further sell-off. If we do not have this pullback move, we're going to look for price to just consistently move lower from this point. The only area of demand that we are actually bothered or looking at is the area of demand that was created before we shifted above the high that caused the liquidity sweep of the previous highs. So this is the high that caused the liquidity sweep of these highs, and this is the order block created before we shifted above it. So I'm looking for price to come down and react within there. Now, I, realistically believe that this is going to run down this low. That's based off of the fact that we are bearish on this pair. Higher time frame is bearish, and the rest of the order blocks within here are mitigated. So we are only looking for that true bearish price action. But of course, we have to have this as an area of potential reactivity. Now, the main principle here that I am looking at is, why are we expecting price to react here? Well, we know that this is a significant order block, as it's the only major order block left unmitigated after this move, and I believe it could supply us with a pullback, which could offer something along the lines of this. We put in a new lower high and then the new delivery lower. So this could be a good opportunity for pullback scenarios into longs to then potentially short. I would, rather than trying to long, just wait for the short to come around. But this is why I show you these points and I give you these scenarios, because it's a very nice example of, if we sell straight off, there's a potential for a pullback to occur from here, and we can then sell if price decides to start dumping again. And we are looking to follow this trend this week, but I don't expect it to get to this low, as that's a little bit out of the way from the daily average in terms of the movements. We do have Powell speaking today, so there of course will be some volatility, but this low needs to be filled, the gap that was created at market open. So that's what we have marked up this week. If you want to take a minute to mark the levels and do the same markup as us, that is completely fine. Like you've seen before, we have a reasonably good track record when it comes to predicting the higher time frame moves across the space of a week. So if you want to follow this and then start to use it, you'll really see why this is so important in terms of your weekly outlook, giving yourself a template for trades for the week itself. So let's move on to gold. So gold, last week we gave out this markup, and again, this is a range bound markup for bearish structure. We overall expect price to be bullish here within this range. The reason for this is because we are higher time frame bullish on gold, so we're looking for price to shift bullish, but it wasn't bullish, it was bearish, right? So we said there's a scenario of us either running the 4-hour high or running the 4-hour low. Based off of this, we had liquidity at our created low here on Friday after sweeping this. So we said we wanted price to sweep this low and either run higher into these highs, fail to react at the supply and go higher, giving us a new bullish bias, or react bearish here, bringing us down into the low end of the range. The other scenario for this is that we just broke straight through the low, then we hit the area of demand and we either push higher or we break down lower. Okay, so very simple. There's only really 3 options here. React here and go high or low, react here and go high or low, react here and go high or low, which we will look at within the fractal structural nature, and then you can begin to trade off that principle. So let's have a look what happened. You see what we did? We swept the liquidity, we ran high, we failed to sell from here, we've broken this high, we are now in a new bullish range. Okay, so I'll show you right now what we're looking at on gold. So remember, these markups may look very simple, but there's no point over predicting the market when in reality you only have like a handful of scenarios that could possibly happen. Where we are right now, this is the range that we have. We have a clear bullish range with a high and a low placed. We've rejected off of the low. We're now starting to push high. We have one area of supply at the high, which is the only unmitigated order block within the range. So there is potential for bearishness off of this. But the main principle here is that we're looking for either price to go bullish from where we are, giving us a new range just running higher, break lower in short term, and then play bullish off of the low. If this happens, so if we break lower and then push into the area of supply, I will expect a short term sell off to come from here, but I wouldn't expect to close below this. Now, if we do close below this low, okay, we have liquidity placed within the market on the left hand side here, and I would expect it to run all the way down to the base where we have our unmitigated area of demand, and this is where I'd expect the true bullish price action to come in if this range fails. Okay, now of course there's always potential for this to not run bullish and price to just go bearish again. If that's the case, then we obviously know later on in the week. But of course, do not overcomplicate things. We're in a bullish range. We have a high target. We have one area of supply within here. If we push lower, we will expect bullishness to come back in. If this range fails, expect it to run down to the nearest area of demand. So a very simple markup for gold, relatively simple for euro. Keep things simple, follow price action and trade your plan. Remember guys, if you have enjoyed this video and you want to be a part of our Discord community, you want to follow me on TradingView, all of that good stuff, you want a broker that we can trust to sign up with, all of the good stuff that you know that we will always provide you, the links are down below. So please do not hesitate to go and check those out. So guys, this has been the midweek markup, and I hope you all have an amazing back end of the week. Trade safe, and I will catch you all on Sunday.